This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston and this is the international edition from interest.co.nz. And today we lead with news other than the crazy American political campaign, which just seems to feed conspiracy narratives. We will ignore that and concentrate on the data. This coming week, all eyes will be on the New Zealand CPI rate for the second quarter, which will be released on Wednesday. Japan, Canada and the UK will also release June CPI data. Later today, we'll get the China GDP result for the second quarter and is likely to confirm the Communist Party's designated targets. But of more interest will be their retail sales, industrial production and electricity production data. We'll also get Australia's June labour force data this week, and from the US it'll be retail sales, housing starts and industrial production. Also, Wall Street will get to see the second week of their second quarter earnings season. The first week was very positive. Chinese banks extended 2.1 trillion in new yuan loans in June, a sharp contraction from the 3.1 trillion in June the previous year, and slightly below the market expectations of 2.2 trillion. The slip aligned with a sharp slowdown in outstanding loan growth, dropping to 8.1% in June from 9.3% the previous month, to mark the smallest amount of loan growth since data started being recorded in 1998. A year ago, it grew at 11.3%. Total social financing in June was 22% less than the same month a year ago. And China's exports were expected to rise 8% in June ahead of new American tariffs, but they actually rose 8.6% to a 15-month high. Their imports fell 2.3%, however, when a 2.8% rise was expected. That divergence meant they reported another big surplus, which will undoubtedly spread the fear of Chinese dumping from its overcapacity situation. They reported they imported almost 16% less from New Zealand in June from the same month a year ago. They exported 2.4% more to us. For Australia, imports were down 5.2% and exports down 4.9%. For the US, their imports from them were down 4.9% too, and exports to them up 1.5%. Overall, trading with China is pretty muted now. The only destinations that China has good export growth to were Brazil, Vietnam, Indonesia, and surprisingly, Taiwan. Everyone else, Russia included, is very ho-hum. And total trade, imports plus exports, is only healthy with Vietnam, Malaysia, and Brazil. Japanese industrial production rose 3.6% in May from the prior month to be up 1.1% from a year ago, solidifying the evidence of an improving Japanese economy. No doubt, the recent lower yen has helped, especially as the pressure from energy prices has waned substantially. And India's inflation rate rose to 5.1% in June, up a rather startling 1.3% in June alone. From a year ago, food prices are up 9.4%, however, within that. This rise was not expected, although their central bank is not expected to react to it because they have given themselves a very generous 2 to 6% target range for inflation. But they are now well above the 4% midpoint, and the froth developing in their breakneck economic expansion will need to be dealt with soon. Industrial output in India rose 5.9% in May from a year ago, well above market expectations of a 4.9% gain, and marking the highest growth rate since October 2023. Manufacturing, which accounts for 80% of total industrial production, expanded by 4.6%, with surge growth noticed in the pharmaceutical sector, basic metals, mining and electricity. American producer prices rose 2.6% in June from a year ago, the most since March 2023, and rising from an upwardly revised 2.4% rate in May. Markets had expected a rise of 2.3%. Under the hood, inflation pressures still lurk, but remain at much more manageable levels. But despite all the vastly improved economic signals, American consumer sentiment still lags. According to the widely watched University of Michigan survey, it fell for a fourth straight month in July to its lowest level since November. Nearly half of consumers are still concerned about high prices and economic uncertainty persisting as their upcoming election looms. In Australia, the number of permanent arrivals in the country is now almost at a new record high in a very sharp rebound. 12,600 people arrived in the country in May, taking the annual level to 161,000. The record high permanent arrival level was 163,000 in February 2009. The US Treasury 10-year yield is now 4.19% and unchanged from Saturday. A week ago it was at 4.28%, so 9 basis points down since then. And the S&P futures, which actively trade through the weekend, suggest Wall Street will open tomorrow with a 0.9% gain. And the price of gold will start today down $4 from Saturday at $2,410 an ounce. So far, no safe haven rush here. And oil prices are still at just under $81.50 a barrel in the US, while the international Brent price is still at just on $84.50 a barrel. A week ago, these prices were $83 and $86.50 a barrel, respectively. And earlier today, Kuwait said it had discovered very large new oil reserves in a marine environment, and it plans production as soon as possible. The Kiwi dollar will start today still at 61.2 US cents and back near the week ago level of 61.4 US cents. Against the Aussie was still at 90.2 Australian cents. Against the euro was still at 56.1 euro cents. That all means our trade weighted index starts today at 69.9, but down from 70.6 a week ago. And the Bitcoin price starts today at $60,044 and up 2.6% from this time Saturday. Volatility of the past 24 hours has been moderate at 2.6% as well. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.